Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Wednesday, October the 5th. The year's 2022. Let's talk trading. Stacking on with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal. Walmal, you like to stack on, but I think we should caution the traders. This is probably a 400 level class.
He can certainly get you into trouble sometimes, that's for sure.
Right. So let's go ahead and you know, tell them what stacking on is, why you do it, and how you do it.
Okay. Well, stacking on, the whole idea is that, hey, we got a trade. We went into a trade. The trade is going in our direction. Everything looks nice. And in addition to that, it looks like the trade is going to continue. It looks like it's going to continue going in the direction that we've already taken our trade in. So, for instance, if you look at the 1 minute chart, it's from the beginning of this hour. Well, if you look at that chart, the first candle on the hour was a good bull candle, and then we had a bear candle. Okay, and using the topic of a flip-flop trade, which we had talked about, I think, about last week, you would then go and enter, at least on my chart, somewhere around, I don't know, let's look at that, about 23.3, something like that. You would enter there. And then, with that entry, it went against you a little bit, but then it came back and it started making you some money. Now, what the possibility is that what you do is on the fourth candle of the hour, you got another down candle there, closed there. Hey, you know what? I'm up, not very much, but I am up. I probably wouldn't stack on there, but maybe I would. So I just go and add another trade, and that's the whole idea, is you add another trade in. And now the idea is that by doing that, you can now make twice as much as you would have made off of your first trade, or maybe not twice as much, but a substantial more. And you just continue every time you get a candle that's in your direction, that would be a possible trade. You just keep on adding it in and adding it in and adding it in. You just stack on, stack on, stack on. Now, here's the cautionary tale with all this. The problem is with doing that, let's say you have a risk appetite of you're willing to go and lose, I don't know, 10 pips, okay? Or, and you stack on. But let's say you're up 3 pips, you stack on, and now it goes against you, and your original trade, you're down 3 pips, but your stack on, let's say you went in when you were +2 or +3, make a +3. Well, now you're not down just the 3 pips, you're not down, 9 pips, so now you're getting out with a big loss. That's the problem with stacking on, is it can turn on you and turn on you very, very quickly. So you got to be very, very agile. But the reality is also you can wind up making a whole lot more pips at the end of the day. And so that gets us into discussions. What do you do to go and mitigate your loss? What do you do to go and make sure you don't get into that situation? Well, the obvious thing to do is that, the first thing you do is that maybe if you're going to go into a trade thinking that you're going to stack on, maybe you don't go and load up. Let's say you're willing to go and trade, 2 lots on a trade. Well, maybe if you're looking at this saying, you know what, I don't know quite if I want to go and take, I think that I'm going to go and stack onto this trade. You know what, I'm only going to go and take a trade at 1 lot. That way it's, the pain in terms of dollars is not as much if the thing goes against me. Of course, the counter side of that is, well, at the same time, I'm not going to go and make as much if it goes in my direction. But the advantage of this is that, you can continue stacking on, where, you're now in with a whole lot more load than you would have been otherwise. But the thing is, you're so far up, it doesn't matter. Perfect example is if you look back at the last hour, that last run down on that hour, you would have gone in at roughly somewhere around, at least I would have gone in somewhere around 38.2. Okay, then that black candle would have closed. You would have had an opportunity to go in again now at 33.5. Okay, then you had the little doji candle. I wouldn't have done anything on that, but I would have waited for the next candle after that closed, and that candle would have closed, at 28.6. So now I'm in 3 times. Now let's say I don't even stack on anymore. Okay, so now you're sitting there with, you could have been, if we took this all the way to the end, so let's say you found that perfect bottom, which none of us could do. You would have gotten 31 on the first trade. You would have gotten, 22 on the second trade, and you would have gotten 19 on the third trade or 18 on the third trade. Well, now you think about that. You've got a significant number of pips in the bank there, but there is some risk for doing this. So that's my 2 cents on stacking on. Now, I got my idea of stacking on from one fellow. I can't even remember who he was, or I know I saw it somewhere, on YouTube or something like that. And that is, what you do is, when you stack on, every time you see a trade that you would actually take, you stack on. And eventually what's going to happen is, in his rationale is, and you keep on doing that until you take a loss. And then once you take a loss on any one particular, trade in that entire deal, you then go and exit out of everything. That was his way of doing it.
Well, when you say take a loss, you mean that the candle closed against you?
Correct.
Okay.
So for instance, let's say, in that big run down that came down, let's say you went in, and the very last black candle down there, which would have put you in somewhere around 6.3, okay, and then, that candle then closed at, 8.2. Well, basically that's a 2-pip loss there on that candle. And he says at that point, just exit out of the whole thing, but if you did that, do what he did, gosh, look at all those other additional pips you would have been able to pick up. So what this does is it goes and maximizes what you can pick up on those runs, but you are taking a risk to do this because, very easily you can get in, you'd be up 3, 4, 5 pips on the first candle. It would be nice just to get out with those 3, 4, 5 pips, just punch out and take it. But you take the risk of putting in a second trade, and it goes against you. You can wind up taking a very nice trade and turning it into a losing trade. So, there's, in anything we do, there's risk involved, and you have to make the decision as a trader. Are you willing to go and take that risk? Are you willing to take that bet? Because the outcome of that bet can be very handsome, but on the same, on that same coin, the other side says you could also go and take something that was very nice and turn it into something that was not so nice.
Right. Would you ever do this on a 5-minute, or was this strictly something that you do on the 1 minute?
I trade basically off the 1 minute, so it's hard to really make that comparison. When I've traded off the 5 minute and even the 15 minute, I've done it there. But because I trade off the 1 minute, that's kind of what I do. Now, when you're doing it on something like the 5 minute, it's, or the 15 minute, man, it's a lot harder to go and do this. And here's the reason why: because you can be up, and because the movement is so much bigger on those things, it's, on those candles, it can sometimes mess with your head a little bit, because you got much bigger candles involved. You could be sitting there, on a 5 minute candle, you can be up 10, 15 pips, and the next thing you know, because you're waiting for the close of that next candle to go and make the decision of in or out, you could actually go and take that 10 or 15 and wind up being, at break even or even a loss. So it's harder to do it, psychologically, I think. But it works, it works on all time frames. The fellow that I learned this from, he used to do this on daily candles. And that's how he did it. And I believe he did this on the stock market. I believe he did it on just the Dow. And but it works on all time frames. It just it's just hard to do.
Yeah, it looks like on the daily, you probably would need something like a 200 pip stop loss, because just
exactly.
I'm looking at the daily range here. The last, you have some huge ranges. I mean, but if you look at the chart, there could be a lot of money made, but
oh yeah, and that's the thing. You got to go pick you got to, so to speak, pick your poison, right?
right,
You got to pick where you got to pick where you're going to do it. And the thing is, just because your stop loss is 200, and I know you say this all the time, Tiro, and it's so true. The amount it moves is not nearly as important in terms of talking about stop. Okay, your stop loss. Because I know people ask you all the time, where do you put your stop loss with this method? And they ask me that same question, and the answer always comes down to the same thing: how much are you willing to lose in terms of dollars? For me, anyway, that's the most important thing. It's not in terms of caps for me; it's in terms of dollars. And now, so you can look at that from a two-sided coin. I've chosen, good, bad, or indifferent, I've chosen that no matter what, I always trade X lots. Okay, that's what I do. I always trade X lots. And TRO, you've known me now for a number of years now, and until I go and actually up how much I'm willing to risk, you can verify that that's what I do. I just always trade that same number all the time. Therefore, it's what it comes down to is that if I'm willing to go to, let's say, lose $500 on a trade, okay, it always means that that's how much I'm willing to lose. Period. End of conversation. That's it. I lose it, I lose it. If I win it, I win it, and that's how I just look at life, it's just it's a win-lose proposition.
right. And I was just gonna say, I pulled up the dashboard here with the ATR zones because we're in the lower rat zone. We're in the lower previous day's wick zone. And we're below the H1 lowest open, so we're in the HOLO zone, and we're right there at the daily low. And we're a few pips above the previous daily low, I believe, which was 12. Call it 1280. So this is one of those sit on your hand opportunities if you're looking for a reversal.
And the thing is, we moved 193 pips, and going back a couple months ago, so well, this is a great area to go, to go long here because heck, the market never moves 193 pips. Well, that's not true over the last couple of weeks.
No, it's not.
So you got to be really careful. So
yeah. I was going to ask you, was there anything else about stacking on you want to point out to the traders out there?
The only thing I would say is that it's one of these things where you got to sit down, you got to play with the numbers and see what works for you, and that's the most important thing. You got to see what works for you in terms of the actual numbers, how much you're going to go and stack on, and how much you're not willing to stack on. Some people will go and stack on. Let's say you're willing to go and trade 4 lots. So in the first trade, they'll go and trade 3 lots. The second trade, they'll do 1 lot. The third trade, they'll do 1 lot. Some people will go and do it differently from each other. For me, I always like to keep things easy and simple, and the reason why I do that is because that way, when I need to go and execute a trade because I see a trade, I don't have to think. Excuse me. All I do is execute.
Right.
And that's the most important thing. It's just to execute. Because if you sit there thinking, that's when you're going to miss.
Yeah. Well, that's about the fastest 15 minutes in trading is almost over again. So, boys and girls and non-binary traders, I hope you may have learned something from the from stacking on from Walmal. But as always, remember, you have to have your stop loss in place because you don't want to lose any more than you want to lose on any one single trade or sets of trades, including stack on, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.